Welcome to Markets Now. I'm Michelle Rook along with Rich Nelson with Allendale and seeing a little red on the board and pretty much all but live cattle futures, at least early in the go here this morning. And Rich, first of all, we had exports out this morning and not bad for corn, at least a little better than we've seen, but maybe a little lackluster for soybeans and wheat here.
That sure is right. Keep in mind for these core numbers, this was 9% under the 5-year average, which is actually relatively good for compared with recent weeks. We're still behind USDA, though. We need to hit these numbers up to 24% above the 5-year average. So we remain quite a bit behind on corn. Soybean sales did set back just a little bit here, 20% below the 5-year average here at 513,000 tons. Soybeans are ahead of USDA's goal currently, so we're still okay on this side. Wheat sales, though, are quite poor, 41% below the 5-year average. So a little concerned about this wheat story not really changing here just yet.
Gotcha. We did get a little export business this morning, a couple of cargoes of soybeans to an unknown destination. So maybe that'll help support soybeans as we go through the day. But honestly, we kind of look like we made our highs in both meal and soybeans on Monday, and we've been retracing kind of under those levels. So do we have all the South American crop production concerns already worked into the market, or is this just some routine profit taking or what?
I do think this South American discussion is a good portion of why we have set back a little bit here. Last couple of days, we have seen this Argentine forecast. Though it still is normal to below normal precip, it has reined in some of the severity. So I think that's the point there. A lot of traders wondering if we will get this Argentine soybean number below that 44, 43 million ton range. I think the latest number from Buenos Aires Grains Exchange, 38 million tons. I think some people saw that as being a little negative here, as it wasn't as severe as the other two estimates.
Yeah, the other, we've been pulled along here in the soybeans so much by this soybean meal market, made new contract highs on Monday above the $500 mark. Now we're back below that level. So have soybean meal futures topped here? And if so, is it going to be hard to retrace here in the soybeans and go back up?
And that's a really good question. On the soybean meal side, I'm not quite sure if we got an official top in here just yet. I think this meal market still has a bit of excitement still with it. So I think we could have a potential pop here and there. For soybeans overall, I do think we have a little trouble now. We've had 3 separate times trying to get this market above 1540, and so far we've been rejected. We can't hold these highs. So I think on this end, we do need to set back just a little bit on soybean futures and kind of wait to see what these next couple of weeks of Argentine weather will bring.
You bet. What about Nopper Crush yesterday? 179 million bushel figure that was below expectations for the month. What's your take on all of that?
It is a little surprising that this crush rate has not been as positive as it should be. This January crush rate was 1.8% below last year. The problem is, to meet USDA's current goal, we need to have these next 7 months ahead of us run in this case about 2.4% over last year. So we know crush is going to pick up here in these next few months, but I'm still a little concerned that maybe it might be a little not as aggressive as what we need to do here.
Rich, the corn market, just like soybeans on Monday, went up, took out some resistance, but then hit its head on another level of resistance that we couldn't take out. And now we're retracing. So again, what is the news that's going to be able to move that market out of this trading range that we're in?
So we need to have something extremely supportive come through here. New news, new supportive news, or we get some new bearish news. I'm a little concerned here that as far as corn specifically, with our still large goal in needed export sales, that we probably won't have this upside push that we want to see. We've still have some intraday gaps, I believe 692, if I remember right. So we have reason to go higher in the charts, but I don't think we've got a fundamental reason there yet. So a little concerned that as we go into March and the trade discussion turns towards acreage, I'm a little concerned that we might have a little more downside than upside here.
Yeah, is the market already anticipating higher corn acreage? Is that part of the problem here?
I do think so. I think most of us are in this idea of 1 to 2 million acres. I believe there is 1 or 2 groups still out there, maybe saying 3. But the point is, we've got USDA's conference next week. That's going to remind the trade that if we do have trend yields, we're going to have soaring ending stocks for this new crop discussion. So as we kind of move away from an old crop argument and include new crop discussions, so far, most of those are going to be a little negative for us on price here.
And I want to go back and ask you just one question about corn exports. Brazil has been undercutting us in the market, but we've also lacked China business. And so one of those two things would have to change here for that export number to pick up, wouldn't it?
It sure would, and we can have our positive arguments. We can say the Ukraine corn planting number may be down sharply these next week. We can have some of those arguments, but the simple point is, so far the U.S. export sales issue, we're running about a $15 to $18 per ton premium over Brazil right now. So far, that's not changing. So we don't have this magic wild card to get us this good supportive news on corn specifically.
Okay. So the wheat market has had a pretty good run off of the lows here, but just like the rest of the complex has kind of run up into the upper end of a trading range and not been able to take that out. So do you think we've put in a little bit of an intermediate high for the time being, or what is that market watching? Is it weather? Is it war premium yet that we need to put in? What is it?
Yeah, I do think it's this war premium issue. So we have on the 21st and we have the 24th of this month, we have two important dates. Putin speaks to his parliament on the 21st, and of course, the 24th is the 1 year anniversary. I do think, and I'm a little concerned about this, that the wheat market does have a war premium involved. It will keep this war premium at least here for another week ahead of us, at least. And I hate these type of markets where we're trading these psychological stories that you can't quite quantify. So for right now, wheat is kind of floating on air here, so to speak.
Do you think Putin will extend the corridor deal or not?
That's a really good question. I think for right now they will, even though you are arguing that they would like these sanctions that the U.S. and EU have put in place indirectly, limiting some of their business. I don't think this is an issue where they can really raise too many sabers. So, in my viewpoint, at least, I do think they will end up signing this agreement even before
All right.
it does.
Cattle market now back in the red, it looks like, and we've kind of retraced under the new contract high areas that we said here earlier this week. So what do you think going forward? It's really all about the cash, isn't it?
It sure is. So we've got this best cash price here since May of 2015 here from last week. We have futures saying that there's another roughly $2 to $3 left before the spring rally is over. But as a whole for futures specifically, I do think they have a good deal of this market enthusiasm already dialed in. So we may go up, retest these highs maybe once or twice again. I'm not quite sure if we have the new news yet to get us another surge to even higher prices.
Mm-hmm. Although exports were pretty decent this morning.
They sure were, 22% over the 5 year average. Now, keep in mind, we are still behind where we should be. We're running about 19% below last year. So good sale for this week, but we need a few more to kind of fix some of our small issues on the exports.
All right. And hogs under pressure yesterday. We're seeing that continue here today. So did the premium that the futures are holding now that April's the spot month just get to be too big here all of a sudden? We've got to rectify that, or what's going on?
Personally, I love this April price, and I would argue that it probably needs to be roughly about $90, so a little higher than current trade. The issue is cash hogs are right now 18% under last year. April futures are 14% under last year. So they are suggesting a small improvement, but not a quote unquote return to normal. So a lot of us are still waiting on these cash markets to have a little better trade in these next few weeks.
Okay. Exports were good this morning, so it's a little bit disappointing when you have that big number that you can't get that market to move off of lows.
Very, very good point here. So we've got slight increases for U.S. cash hogs and cash pork. Here, as far as pork export sales, though, this number was more than double last year's sale in the same week. And as far as China buying, they're about just a little over 4,000 tons. So as far as positive news on exports, maybe a slightly changing story there. Again, I think a lot of us want to see these U.S. cash markets really pick up.
All right. Sounds good. Thanks so much for joining us. Rich Nelson with Allendale, and that's Markets Now.